Hi everyone, I'm Ken from CryptoTradingKS. In this video, this special video, we're going to talk about death crosses and golden crosses. So what is a death cross? A death cross is where the 50-day simple moving average passes through the 200-day moving average. You can see that it occurred here in the S&P 500 on around the 14th of March 2022. It's looking really interesting. If we get the 50-day passing across, cutting through that 200-day moving average, we could witness a golden cross. But what does it really mean, and how can you profit from it? Stay tuned, I'll let you know. Moving averages are extensively used. And what is a moving average? It's literally an average. What is the 50-day simple moving average? It's where equally weighted closing prices for the past 50 days are added together and then divided by 50. Pretty complex. Therefore, what is the 200-day simple moving average, or SMA? Most commonly just MA. Well, it's the past 200 days prices all summed together and divided by 200. Again, incredibly complex stuff. And then what happens day by day? Well, these moving averages just take the 200 days previously for the 200-day moving average, or the 50 days previous for the 50-day moving average, and just average them. When I was lecturing in first and second year statistics, I wanted people to really understand what is going on. All of these formulas mean something. So what would a one-day moving average look like? The correct answer is, it's already there. I just popped it in. You can see it just reflects price because it's the price divided by 1. Hang on, that's the price. Hence, it's literally the price. Let's have a look at the 5-day moving average. What we can see here is this is the 5-day moving average, that white line. It's simply the past 5 days, all added together, the prices added together and divided by 5. How about the 21-day moving average? What would that look like? You got it. It's the white line. What would the 100-day period moving average look like? Well, it's the white line again. What does a 500-day moving average look like? It looks like that white line. What am I actually showing here? You can make a moving average any period. Let's go crazy. Let's make a 1,000-day moving average. Oh, there you go. What I've just shown you is the understanding behind moving averages. Always have an understanding basis with your knowledge. If you don't understand it, you won't know how to apply it. What that little analysis showed us is the shorter the period of the moving average, for example, 1 day. 1 day is just the price because that's what it is. But if you have a 50-day, it's the past 50 days averaged out, all summed together and divided by 50. If it's the past 200 days, it's 200 days going back from the current price divided by 200. And that's what we're seeing in here and in here. So how do we read this? What we can see is that the 200-day moving average is currently 39.6887 on the S&P 500. The 50-day moving average is 39.28 and 98 cents. We can also see that the closing price of the S&P 500 is 39.72 and 60 cents. What does this actually mean? Price has actually come through the 200-day moving average, and it's also above the 50-day moving average as well. When we do CTKS Method Standards Certification process on our charts, we don't pay too much attention to these particular lines, but I want to show you because you need to understand what the retail market is looking at. How would retail actually look at this particular price momentum? Well, they would look at where a cut occurred and then go back in time and try to figure out what could happen next based on what happened in the past. That is story-based analysis. So when we see this particular death cross happen here, the 50 cut through the 200, that is a death cross. But you can see the death was already in the market. Actually, if you go to the point of the death cross, what you can see is the price was already recovering at that point. What about the Golden Cross? Oh, it sounds so cool, doesn't it? Golden Cross. It must be golden. It must be fantastic. But what actually happened? Price here back in March of 2020 was actually recovering all the way up here, and then investors, retail investors, got the signal, oh, okay, a golden cross has occurred, let's pile into the market. Please let me know in the comments, is this a reliable trading signal? It's a really important question to be able to answer. When it comes to trading, trading is all about speed. It's all about predicting movements ahead of time. Could you use the death cross to predict your trades coming up, or the golden cross? Please let me know that in the comments as well. Again, it's really important. Let's whip back to 2018. We can see that the 50 cut through the 200 right here on the 4th of December 2018. What happened next? Indeed, a sell-off did follow that. What happened with the Golden Cross? Was there any recovery in price before the Golden Cross happened? You know that there had to be, because the 50-day had to actually catch up to the 200-day. That means the 50-day had to register increasingly increasing prices in order to average out at a higher level. Let's look at this from a statistical perspective. In 2018, from the death cross, it took 22 days to hit the bottom. And when the Golden Cross actually said, hey, everyone, everything is fine, pile back into the market, because this is what retail traders look at. It's not what we look at, but it's what retail traders look at. By the time that actually occurred, price was increasing for 93 days. And have a look forward. Looking forward, we can see that in 66 days, whatever gains were made by piling into the market were actually wiped out. This is pretty interesting. Let's look further back in terms of history. Let's head back in time to the end of August 2015, and we can see that the 50-day cut through the 200-day, creating a death cross. So what actually happened with price? We can see that the price actually started recovering as the death cross was triggered. There was a little bit more negative price action, but the concept is when people hear death cross, they say, ooh, that can't be good. I better get my money out. And what do we see here? Some very, very sneaky behavior. We can see that a golden cross occurred, then followed by another death cross. Oh, you just can't trust these indicators. They're supposed to be reliable, but they're not. Let's have a look. We had a death cross here and another golden cross over here. The thing to actually understand, mathematically, what's happening here, in order to turn this 50-day moving average around, because you know it's just the past 50 days summed together and divided by 50. In order for a golden cross to actually occur, we had to see increasing price momentum. And the more the price momentum increases, the more that the 50-day will turn around eventually. What typically happens is when price has been on a pretty major rally and it gets a retail signal, price will typically pull back. This is just the way the professionals look at the market. Let's do our analysis again. We can see from this particular death cross, it took about 12 days to bottom out. And by the time the golden cross had occurred, price had been increasing. It bottomed out 71 days ago. And then if we go forward in time, you would have a lot of people FOMOing in, a lot of retail FOMOing in, not professional. Professional thinks completely differently, but retail would pile in and 67 days later would be underwater. One really telling point is when this particular golden cross occurred at this time, the bottom was put in 114 days before that occurred. And in that particular case, this golden cross didn't help anyone because price collapsed down again. Looking back to the 11th of August 2011, things got rather choppy around that period of time. You could have said that a short-term base was actually formed a couple of days before the death cross. You didn't actually see a cascading sell-off after the death cross. You saw a reasonable level of consolidation, but it actually bottomed out 54 days after the death cross. What we also saw after that bottom, about 119 days after that, the Golden Cross occurred. But as we've seen previously, in about 125 days, we saw that price actually came down and retested the 200-day moving average. If you took the Golden Cross signal, indeed, the prices did go up, but then they started to weaken, they came down, and they actually crossed through the 200-day. We've seen that quite a few times now. Let's go back a little bit of time to July of 2010. What we can see, we did indeed have another death cross, but the bottom was actually hammered in pretty much around that time. And then 112 days later, we had the Golden Cross. This is quite interesting because when you think about death crosses, the very sound of the name, death cross, is like, whoa, I better just run straight away out of the market. Things are getting bad. And if we had a look at that particular death cross that was there, just imagine the retail sentiment in the market as they see price falling, and the death cross, and it's pretty much hammering in the bottom as well. So we can see that death crosses are not necessarily very deathy. And we can also see that golden crosses are not that really golden. A lot of people talk about them, but the statistics just don't bear up in that favor. And we have to always be aware that price is always moving in a wave. Knowing your support levels, your resistance levels is absolutely critical, and making decisions based on those. We can see that from the particular golden cross that was triggered here in October of 2010, we did in fact cut through the 200-day moving average, but if we look at it, it came all the way back to here. So if you bought there, held for 347 days, your investment would be underwater. Now that we've run the numbers together, we've looked at past intersections, both on the death cross and the golden cross side. If we do in fact get a golden cross, you already know that's because the average value has been increasing. Why is the average value increasing? Because the bottom was piled in a long time before that. That's something to understand. If we get a golden cross, a lot of retail will say, fantastic, it's all over, the negativity has passed. And they will pile in. As we've seen previously, that can cause a short-term increase in price. But what do we notice about what's happened in the past? In the past, we've always had a revisiting of the 200-day period moving average. So just keep that in mind. The news inside the market is not really that positive at the moment. When people look at the 200-day moving average, they say if we get above it, it's a bull market. If we're below it, it's a bear market. These kind of things are far, far too simplistic. It's really all about smart money support and smart money resistance. If we just looked at the chart like this in terms of moving averages, and that's how a lot of people do look at their charts, where is the resistance and where is the resistance playing through from a long-term time perspective, analyzing all of price history, not just recent price history? That answer is given through the CTKS method. We can see that there's a lot of structural resistance at the 4108, 4161 and 4199 levels. It's quite possible that price could get magnetized back up to these levels, because that's the way that things work inside markets. We can also tell that we've got a lot of smart money buy levels around the current price, and this is very, very constructive. The probability is that we could come up and actually start to challenge the 4100 level. But as professionals, we're always aware the price can either move against us, just go nowhere, go flat, or move for us, if in terms of thinking that you're going long at spot. The same three dimensions apply if you're going short, but using leverage can get you very, very heavily liquidated. You can actually win all the races and lose the last and end up with nothing. As a community, we prefer to go slow to go fast. It's all built on your knowledge. So we can actually tell what the internal market structure is through these SLs, these smart money buy levels if they're below price, and smart money sell levels if they're above price. And SL is a Stanfield level. Bitcoin is seen as a risk-on asset, and it's quite risky as well. When we look at Bitcoin's momentum versus the S&P 500, we can see that there's a basic correlation. It doesn't always hold true because we can get things like the FTX sell-off, which distorts price momentum. Then it takes a little bit of time to get back into sync with the market. Zooming in to a lower time frame, we can see that indeed Bitcoin's gravitational pull is influenced by the stock market, and we know Bitcoin cannot escape the stock market's gravity. So as the stock market was coming up, it pulled Bitcoin up with it. When it retraced, Bitcoin came down. But since it's been sort of recovering, what are we seeing in here? Sort of a recovery as well. This is why we spend quite a bit of time each day looking at the main markets, because they're really, really important for crypto. And if you're in the main market and you don't look at crypto, you're missing a very, very valuable signal in Bitcoin. Bitcoin can help to actually see and detect where bottoms are potentially forming. We're seeing a lot of optimism coming into the crypto market. And when it comes to the S&P 500, we can see that we've got quite a few smart money buy levels beneath the current price. To simplify the whole process down, when you're looking at price between the 38.84 to the 39.33 level, we're going to find quite a bit of support. Smart money will come in and buy that. But if it starts to go below 38.84, prepare for more negative price momentum. If prices continue up, the real resistance inside the market is not at 4,000. It's at 4107 up to 4200. Please let me know in the comments, is this kind of analysis helpful for you? What other kinds of analysis would you like to see? And I'd like to thank you for watching, and also sending lots of love to our extended global family. And if you're going through a life pullback at the moment, and I know some of our beloved global family are, please know that our love and healing thoughts are with you. You're not alone. And that's a really important thing to understand in life. You are not alone. Have a fantastic weekend ahead, and we look forward to joining you tomorrow.